Now, one of the challenging things about this year's budget is that we are increasing mill rates. We have two mill rates. We have the residential mill rates, and that's for homeowners, and we have the commercial mill rate, and that's for commercial property owners, business property owners. The residential mill rate is increasing by 0.4 mils, so from 7.3 to 7.7, and the commercial mill rate is going up by 1.4 mils. Now, the good news about that is that we've really done a lot of work to keep that increase as low as possible. And really, in terms of the residential mill rate, homeowners will, 80%, 4 out of 5 homeowners will only see an increase of $10 or less. And in fact, a third of homeowners will see a zero change or a decrease on their tax bill. Now, the reason that the mill rates are going up, there's two key reasons. One is simply because assessed values have gone down on average, and we have to correct for that with a mill rate increase because the assessed values are multiplied by that mill rate to get the tax bills that cover the revenue that pays for the budget. So a good chunk of that mill rate increase is simply to keep things on par with previous budgets. But there are some cost and expense increases that we're seeing that we've managed to keep down, as I mentioned. But for example, one key one is what's called our debt servicing payments, and that's all about infrastructure. That's all about keeping our roads, building our key facilities, keeping them maintained, and capital projects like that are, for the most part, actually partially funded by other levels of governments and through other funds. So in a lot of cases, we'll pay 50 to 33% on those. But when we pay for our portion, we do have to pay off a loan to cover that. So every year we have debt servicing costs, and we've been building a lot, and the city has been growing. So we're seeing that cost increase. So those are the two main reasons that the mill rates are going up this year.